And we're live. How's everybody doing today? Thank you so much. Today I am sitting here with Mitchell J, who is, he's got, of course, his own show, the Scaredy Cat Investor Show, as well as is a member of kind of the team on the marketmentor.io. Sorry, Joe. I'll make sure that we post that link below if you want to do the same. And of course, been around for a long time, invested in a lot of different things. Mitchell, what's up, man? Thanks for joining me today. I really appreciate it.
Hey, man, my pleasure. It's fun to be on the other side of this for a change.
Yeah, I guess, right? I know I've actually been asked to interview, and I've kind of done a couple of other really small interviews, and it gets weird. But today we're just here to hang out. Got some people live, which is awesome. Really appreciate everybody tuning in and just kind of talk about crypto. But before we get going, I want to give you a little bit of a chance to kind of talk about yourself, some of the stuff that you do. Of course, you've got the Scaredy Cat Investor Show. What is that? What is mentormarket.io? And then, as I understand, we were kind of talking a little bit earlier, and you're involved in a security token project yourself, which I'm really intrigued by. So maybe we'll just start off with that.
Yeah, a lot going on, and that's just the online world. I also do some things in the physical world as well with real estate. So yeah, I need to clone myself.
Don't we all?
But actually, I like to kind of just jump into TIM, which is the acronym for the mentor market, and basically what that is, and I guess to use the simplest example, if you're familiar with Seeking Alpha, if you're familiar with that website at all, to me it's a similar setup, except for it's more so linked to crypto, and we're essentially I want to say integrated with Steam as opposed to linked to it, because all the posts that we put on the website get pushed to, and most people use Steemit for the front end, but they get pushed to the Steem blockchain. And anyone that's familiar with Steemit knows that is a crypto Steem, and it's for the most part linked to steemit.com, which is the front end that most people know. There's a lot of third-party front ends now, but it's the first website, forum, whatever you want to call it, where you're having people contribute and it essentially hitting the blockchain. You generally don't see that. Like you said, we have websites like Seeking Alpha, things like that are just plain traditional third-party websites. So it's still in the early stages, but we have a good group of mentors on there writing. I've had a few of them on my radio show actually, and that's actually how I got introduced to the site. And it's great because for people that are either veteran traders, veteran investors, that do like sharing their knowledge or do just like communicating, what it is they're doing, it gives them a platform, and it also gives people an opportunity to A, not only learn, but B, take that information and then make some educated decisions for themselves on investments. So it's great too because it's across the board. It's not just like people for the most part think, oh, it's a bunch of crypto heads talking crypto. Not even close. We got guys that do Forex every day. We got guys talking about commodities. We got guys that are doing stocks, and then obviously it's crypto as well. And I even throw a curveball in there sometime talking real estate investing, which is not even kind of one of the focuses. So it's a broad-based place for financial knowledge, education, and I really like what it's building to be, because there's we have the trading pits, it's called. And it's kind of basically like interactive forums, like chat rooms, where you can essentially talk to the mentors that are posting information and talking about, the trades they're doing, the investments they're making. And it's something that I've, in years past been involved in as a end user, so to speak. And now, with all the experience I've gained over the decades, because apparently I'm starting to get old, it's fun to share all that knowledge and experience. And it's good to see other experienced, respectable investors on there. Like I said, I like to say I'm someone that usually likes to keep it real. So I'm a critic unless I'm a believer, and we got a lot of good people on there posting good stuff. I don't even want to shout any specific names because I'll feel bad if I let anyone out. If I leave anyone out, I'll feel bad. But I got a few of my own favorites on the site. So yeah, it's coming together, and we're always looking to bring on more contributors, more writers. So if anyone's got some experience and loves sharing their investment knowledge, just contact the team. and they'll get you on board, get you involved, and hopefully the thing continues to grow, and we get a good community, and we can all make better investment decisions together. Because like I tell people all the time when I'm teaching just whatever investment asset we're talking about, get educated, but get experience, because you can listen to everything I have to teach you, and you're still going to have things you need to learn. You're still going to have experiences that are separate to you and don't pertain to me, because we're different risk appetites, different financial positions. Everyone's different. You have to realize what's right for you, but learn what you can from others so you can make better financial decisions. Because the bottom line is, you're going to make mistakes here and there, and things aren't going to go your way here and there. I mean, that's investing. I mean, in the end, it comes down to risk reward. There's no reward without risk. So that's investing, regardless of what the asset is. But so that's kind of a big spiel on the site.
I love it. I also know like Gordon Buckley and Workin, of course, post on Trybe all the time. So
okay, yeah, Workin.
Yeah, I've been familiar with those guys for quite a while. So it's of course Joe is another big supporter of Trybe. So it's cool. I like the website. I find myself on there every single day checking out articles, and it's sweet, man. I like what you guys do there. I guess Scaredy Cat Investor Show. What's that all about?
So basically, what happened was when I got involved in crypto, I stumbled across a community of people on a Discord server, and it was mainly kind of revolved around Steemit, people that I met through Steam and Steemit, and one of them decided that we got this big community, like, let's do a radio show or start a radio station. So they basically started what is essentially an internet radio station, although they really hate when I call it a radio station. So it was very much so a lot of like artsy stuff, just people doing like whatever, music and art and just creative, topics. So I was like, hey, there's no kind of financial education or financial, show. I was like, can I do a show? And they were all about it. And it just started as a fun little thing. And here it is over 2 years later, and I'm exhausted. Yeah. So, it's a 2-hour show every Tuesday from 3 to 5 Eastern, 8 p.m. UTC. And basically, we do a crypto market check every show, and that's just basically me running through the crypto charts. I'll look at a handful of them. I always look at Bitcoin, obviously, because that's still the lead dog. But then I'll look at Steam. I'll look at some of the other coins that I'm particularly invested in, like EOS, and then anything else that maybe someone in the audience wants to see. So basically just straight technical charting. I'm a technical trader. I day traded full time equities for about 6 years. So so that's what I love about crypto, is that you look at charts and a lot of it transcends. And in 2016, 2017, crypto was literally, to me, a mirror image of internet stocks in 1988, 1999, where like anyone and their brother was an awesome trader. It's like your cab driver telling you about how much money he's making in whatever, pets.com, only to, see it all go poof a year later. So I was seeing that, obviously with crypto. So I use that to my advantage, because I kind of recognized what was going on. So I was able to make some good trades. But also I knew that at some point the fat lady was going to sing, because a market's a market. It doesn't matter. Everything has cycles. And I will say crypto happened way faster than anyone expected, even me, because I was kind of comparing it to the internet stocks, and it took about half the amount of time to do the crazy rip, peak, capitulation, come down. So it even caught me a little bit. I would have sold a lot more than I had I believed it was going to happen that fast. But it was a wild ride. So the good news is, like I said, so since I had that background in trading and looking at charts, I used a lot of that to trade crypto and share analysis with people. And like I said, I do that on the radio show, and also majority of my posts on Tim are, a lot of crypto analysis. Like I said, I mix in some other stuff with like stocks and real estate, but for the most part, I'm analyzing crypto charts. And what I want to kind of mention to everyone that I think is important is that someone that's posting a update about a crypto chart, about the same coin every single day, is not adding any value to you. Like in the last 3 months, there's no need to post an analysis every single day. Like I do it my radio show once a week.
Yeah.
On last Tuesday, I talked about Bitcoin. I literally led with, all right, guys, nothing has changed literally since last week, but let's review it anyway. So, I mean, a year ago, it was nonstop. I mean, because we had so much volatility, so much movement, but it's a quiet market. It's dead. The volume's dead. We're going sideways. I mean, there's not, unless you're day trading, there's not something to do. And even the day trades, like you're forcing it. It's no different than if you're in stocks and you're trying to find trades. So,
Can I ask you a question kind of pertaining to that? It's my impression that the guys with like the whales, the people with the big money, these are the kind of people, are they looking at daily charts or do they care about daily charts? Because it's my understanding they're looking at like the weeklies, they're looking at the monthly. How do like the big fish trade? What kind of a time frame are they looking at when they're studying these things?
Well, it's funny you mention that. So I'll talk about investing on a whole and then give you my opinion in regards to crypto whales, because I think that's a whole nother animal. But as far as that goes, I think, and it really doesn't even depend on the size, but when you're talking about someone that's position trading as opposed to like actively trading, and that's a term that a veteran trader I'm friends with kind of like instilled in my head. He's like, you can still be a trader, but that doesn't mean you have to make trades every day. He's like, you basically have a larger position that you kind of trade around. And yes, they will definitely use time frame analysis. That's something I preach. And well, random shameless plug, I created like a crypto trading course, and one of the videos is time frame analysis. And basically, like I always say, is larger time frames dominate. The larger time frame always carries more weight than the smaller one. So anyone that's position trading, whether it's a whale or even someone smaller, they're looking at that higher time frame and working their way down. So yeah, you'll look at a monthly, you'll look at a weekly, a daily, and then maybe even go to an hourly for to use as like an entry to find your entry on a given day. Because I rather obviously buy something after it pulls back a point as opposed to after it's ripped a point. So best case scenario, they're all in sync. Your monthly's in an uptrend, your weekly's in an uptrend, your daily's in an uptrend. Well, as we've seen, I think up until maybe a month ago when we finally went sideways, we had the opposite. Pretty much everything was in sync on a downtrend. But yeah, anyone who's position trading and anyone who's working with a large position like a whale or even like a hedge fund with stocks, they are looking at those bigger time frames and then making directional decisions based off of that. Because the bottom line is, it sounds like a cheesy line that everyone knows, but the trend is your friend. It's simple and trivial, but in the end, it's true. So I always tell people, I was just like, find the pullbacks in an uptrend and buy those, or find, the rips in a downtrend and short those. Obviously easier said than done with crypto. It's a little harder to short. I mean, there's places you can do it now, but a year ago it was almost impossible, which is too bad because there was some opportunities. But yeah, so even when it comes to like crypto, what I was doing when I was trading it actively was, particularly when we were in the bull market, was I was basically just looking at these different time frames and I was looking for one single pattern, and it's what I call a bullish U-turn. So anytime I would see this pullback and I would get the reversal candle that completed the pattern, it was an automatic buy. I'd buy it and I put my stop loss, at the bottom of that reversal candle, and done and done. And obviously a lot of them were working out because we were in an aggressive uptrend. Is that always going to be the case? No. That's why it's a probabilities game, and over the long run, you're going to have your streaks of winners, but then you're going to hit those patches where, and it happened. I mean, think about the first half of 2018. Almost every dip you bought, you got stopped out. And I got stopped out like 5-6 straight times, I think, at one point on Bitcoin. And I was like, well, this is what I get for trying to buy dips on what is now clearly no longer an uptrend. So as much as I know, and as long as I've been doing it, I mean, still it all comes down to psychology and discipline, not doing what you're not supposed to. So, but yeah.
What would be if somebody came to you fresh and they're like, hey, look, maybe they know that you've been doing this for a long time, and say, hey, Mitchell, I want to get into cryptocurrency, and they're fresh. I mean, fresh. What are some of the things that you tell them to keep in mind, and what are some of the things that maybe you see potential investors who are coming in, or even investors who've been in for a while, are not doing properly?
Okay. It's funny that you asked that because basically when someone gets started, I guess a lot of times people want to gamble in a way and they don't even realize they're gambling. The most important thing is understanding risk reward. And if there's one piece of advice I can give everybody is that if you're going to invest in something, when you do so, before you even get in it, know what your downside is, know what your downside exit is. So, I mean, if you want to make it really simple on yourself, you could look at something like Bitcoin now and say, all right, we're floating around 3,500. It's 20K or bust. Like, so perfect. You know that the most you can risk is 3,500 points. And if you believe at some point we're going to get back to the old time highs, then 20K, that's great. You know, that risk reward scenario is pretty damn good. So the benchmark I tell people all the time is minimum anything you're going to invest in. If you don't think you're getting a 2-to-1 risk reward, just walk away. And the reason for that is because if you do it, then you only have to be right half the time and you won't have lost money. Now, I can tell you that a lot of the great traders, because, you know, you like education is still a never-ending process. You should be doing your whole life. So I've, you know, studied a lot of these veteran traders, some of the most respected, you know, investors and money managers, and a lot of them, it's 4-to-1, 5-to-1. One of the kind of long-running oldest money managers, Paul Tudor Jones, he has like a steadfast 5-to-1, which blows my mind because who has the patience for that? How often do you find 5-to-1 opportunities? But I remember listening to a story. It was actually Tony Robbins was on, I think it was like Tim Ferriss's podcast, but he talked about how, you know, he's worked with Paul Tudor Jones and how he was going through this like rough streak and he was trying to figure out what was, you know, what was off. And someone that veteran still fell into a trap where they were starting to basically accept investments that didn't meet that criteria. So it ended up hurting his results because, you know, now he's not making the profits he normally would make when he is right. And now you have those losers. So it's like it shrinks to percentage gain. And I mean, I want to be in that spot where my biggest problem is that I'm still making great percentage return, but it's just not as good as it used to be. Like tough world, tough life.
Yeah.
But so, yeah, I mean, if there's one steadfast thing people can just use is risk reward, minimum 2-to-1 or better. And if you just live by that, you've already put yourself in a better position than 90% of the investors out there, because you'd be surprised how no one does it. And it's such a simple principle.
What kind of research, when you're looking at a potential investment, whether it's a real estate, or sorry, not whether it's real estate, but whether it's like a crypto or a stock, what are some of the things that you do? Because I think a lot of investors just are naive to that kind of a thing. Like, what are some of the things that you're looking for? Is it like, are you digging through the company's records? Are you looking at the team members? Are you just trading strictly from charts? Like, what's kind of some of your methodology to prepare you to get into some of these investments?
Well, the good news is, you know, with the internet and technology these days, you can leverage other people's knowledge so easy. So, I mean, to be honest, I actually myself leverage mentor market a lot. I will go and especially when it comes to stocks, I'll read a lot of Roland Thomas's stuff because he's kind of all over the stock market. And I've gotten to the point where I'm so busy, I can't do the necessary research. And I'm starting to leverage people that I know whose opinions and research I respect and value. You know, like the saying goes, work smarter, not harder. I'm finally figuring that out too late in life. But so for me, yeah, I'm predominantly a technical trader, especially when it comes to crypto. Because I mean, there's only so many white papers you can read, and there's only so much time you have in a day. Especially if you're focusing on other things. I'm not just doing crypto. So what I'll do is I will leverage other people's research that I respect for the non-technical pieces. But when it comes to the charting, I mean, I'm always going to look at the charts myself. Even if I read, you know, one of the other mentors, if I read their technical analysis, I'm still going to look at the chart myself and see if there's anything I see different or if I agree. And many times I do. So yeah, straight technical analysis for me. And then as far as fundamental stuff, I leverage other people's research. So the only time I get into quote unquote fundamental, I guess, is with my real estate investing. Because that's a little more important. I don't want to end up with a property in a war zone.
Exactly. Yeah. Let's that was kind of like leading in towards my next question. Let's talk about diversification. We'll talk about maybe diversification in the microcosm of cryptocurrency itself, and then we'll talk about diversification of assets in general. Like, how important is it to diversify when you're in crypto, and how important is it to own more than crypto in your personal opinion?
All right, so I love this question because I've actually posted about this, and I've actually had full segments on my show about this. And it was after reading Ray Dalio's book. Ray Dalio is basically my investing hero. This guy is like middle class. He's a middle class kid from Long Island, which is where I'm from, and now has the third largest hedge fund in the world, and for the last 30 plus years has been one of the top money managers, period. So based on reading a lot of his research, you can diversify all you want within one asset class, but it only does a certain percentage of actual risk mitigation and actual diversification. So you definitely need to diversify amongst asset classes, because the bottom line is, whether you own 5 different cryptocurrency coins or 12 different cryptocurrency coins, you're technically diversified the same amount, because you hit basically like a saturation point. And you can actually get, based on all the research, you can never be more than essentially 20% diversified if you're in one asset class. It doesn't matter. You can keep buying more and more coins. It doesn't matter, because it's still within the same market. And yeah, 1 or 2 can branch off and do their own thing here and there, but it's a correlated investment. So you're still 80% correlated. Once you kind of go like 5 more, it doesn't change. So with that said, and given that, we have crypto crowds, and, my show, a lot of people, it's a crypto crowd. I try to preach. I'm like, guys, I know we love crypto and I know it's the future and all that stuff, and I'm with you, but you still got to diversify, because anything can happen. And if the whole entire crypto market, comes crashing down, there goes your whole entire, financial, wealth and whatnot. And we, in a way, saw a lot of that. I mean, there was people plowing in gung ho, and I even have, personal friends that, I knew, before I even got involved in kind of like the online crypto world, that got involved in crypto. And as I was like selling some crypto off and diversifying into other things, they were literally making fun of me. They're like, dude, you're crazy. It went up another 10 points today. And I'm just like, hey man, more power to you. I'm like, I still have coins it's still working. I just have less of it. And I have sadly a few friends that would not listen to me at all, never sold anything. And now they're at a loss. And it's just, it's rough. Like you got to diversify over the long run. But again, it's your risk appetite. I know some people that like to take shots. It's like, you know what? This is hot right now, like pot stocks. I'm going to load up on pot stocks, and basically a year from now, I'm either going to be collecting bank or I'm going to have nothing, right? Then yeah. So, and then, there's a reason that my brand is Scaredy Cat Guide, because I'm a risk adverse person. Like, I want to make sure I have money. Like, yeah, there may be someone that takes a shot and makes that $1 million, and I may only make $500,000, but you know what? That same person is also going to be the one that loses it all. I'm never going to be that guy. So I'm okay with playing it safe, and I don't need to have, private jet money. I don't have those aspirations. You know what I mean? I just want to have, well, I have most of what I want already, but I wouldn't mind adding a few extra things. But, it doesn't, people think like what it takes to be like financially free, and no one actually does the numbers. And when you do them, it is way less than you think it is. Way less. Like, especially depending on what your structure is. Like, I don't have any debt outside of the mortgages that are getting paid by my tenants on the rental property. So my lifestyle isn't super expensive, and I don't have any kids, so it gets even cheaper. So I can live like a rock star on like the average American salary. So if I can create that passively, I'm like, all right, I'm kind of living the life right now. Like, I don't have to go to a 9 to 5, but I got the income coming in. So, you do that through diversification, because you got it all locked up in one thing. The market turns and it's like, oh, well, there goes my lifestyle, time to go get a job. And, and we've seen it in the crypto space. A lot of people that, are in the communities and, even worked on some of, doing podcasts and shows, have disappeared because they had to go back to doing something that guaranteed they got a paycheck. Yeah. So, me personally, I'm a huge proponent of diversification. And again, you have to be not only in different assets, but in uncorrelated assets. So again, if you do like stocks, real estate, crypto, all right, we have some, separation there. Even getting into like commodities, like for instance, like if I invest in gold and Bitcoin, those are two very, very uncorrelated investments,
Yeah.
even though people call Bitcoin the gold of crypto. And I personally think that's what it's becoming. But in the end, these are two very, very, very different uncorrelated assets. So if you want to diversify yourself and get some safety, it's just like, well, you can sell some Bitcoin, store it in gold. And, gold really doesn't even move anymore. It's just so, but that's just a random example.
For people who are maybe the cryptocurrency market is kind of sucked in, maybe they've picked up a certain amount of skills along the way. They've learned a little bit of TA. They're starting to make some trades. They're shorting on Bitfinex, whatever it might be. In order to be able to kind of pursue a little bit of diversification, is there any particular industry that you think that the TA skills are transferable to that's a little bit less risk adverse, or a little bit more risk adverse rather? And like, what would you suggest to somebody if they wanted to start diversifying? Maybe they did really well. Maybe they bought a bunch of Bitcoin in 2014. They've done well. They've watched the crypto market kind of come up and down. What would you recommend to something that either utilizes some of the same skills, or B, is something else that's a little bit safer with a lower barrier to entry?
Okay. Well, it's funny. It's interesting. I don't know if there is something that I would consider safer, but as far as, transfer, those skills transcending, I think they can kind of go across the board, because if you understand some TA, you can apply that to, stock charts, you can apply that to Forex, and even commodities and currencies. Well, Forex, yeah, currencies. So I think any of the above. I think really the risk is a lot determined by the actual individual, by the investor, by the trader, because I think more so when you talk about something safer, it's more that it's less volatile than it is less risky. That's what, like, inherently it makes it less risky because it's less volatile. So yeah, if that's the case, it's like, all right, what would be less? Opinions can vary, because I could tell you like Forex to me is less volatile and less risky than stocks and crypto, but I'll have Forex traders that completely disagree with that. So, it's kind of to each their own. No matter what the investment in, it does have risk. But yeah, there's less volatility. But I think that ebbs and flows, because you can even see like the stock market. The biggest complaint of day traders over the last 6, 7, 8 years with the stock market was the volatility died. Like, we were just on a slow grind higher all the time. And now over the last 6 months, we've gotten crazy volatility, and the day traders are loving it. But now the average Joe is feeling like, oh my God, the stock market's so risky. But 6 months before that, they were just like, oh, I'll just plow my money in the stock market. It's good to go. Like, so that's an ever-changing answer. And I think it's correlated to the volatility of a given market at the time. But the best thing you can do is you can mitigate that by having strict risk-reward profiles, and making sure you have them in place before you press enter and get into the trade, because we all know how it goes. We're the most like rational, smart people ever before we enter a trade. And then as soon as we get in the trade, everything goes out the window, and we basically might as well be at the, track, yelling at our horse to, run faster.
I totally agree, man. I wanted to also kind of touch back to something you mentioned. You talked about Bitcoin as kind of the case for digital gold. And I, of course, like I have some opinions about that myself, but I was wondering kind of what your scope is. I know Bitcoin utilization is up quite a bit in the last little while, but I also know it still takes me an hour to get my coffee. And do you think at some point we're going to see a flippening where we're going to see just a complete market chaos as maybe some of the alts start to surpass Bitcoin? Do you think that maybe if that were to happen, would it happen slowly? Or what do you kind of see as the future of Bitcoin?
My gut feeling is I 100% believe that's going to happen. I think Bitcoin will end up becoming what gold is to fiat. I think Bitcoin is going to become to whatever coin it is. Like, that's the thing too, in terms of, diversification. It's just like, all right, diversify within an asset and in others, but you should hold a handful of coins you believe in. Like, I hold 12 different coins. I know probably 10 out of those 12 are going to end up being worth nothing. They're basically just shit coins. But out of those 12, hopefully 2 of them are the ones that become, the Amazon.com, and then the rest of them are pets.com. It's the example I always like to use. So Yeah, I don't think Bitcoin's going to be that coin. I think, like, I mean, granted, whatever, they're trying to make changes, so it is a faster transactional currency. But the bottom line is, it was the first one created. It was, everyone's improved on the tech, and yeah, you can make changes and what. But I feel like once you build a foundation with anything, whatever it is, like you're stuck working from that foundation. So you can only make it, you can only throw so much lipstick on a pig, so to speak. So
Yeah,
I true like yeah. So I think Bitcoin is going to become a store of value. I think also too. Think about 21 million coins.
yep.
Is that enough for it to be a transactional currency? Absolutely not. You need billions of coins. So yeah, I think it's going to be the store of value. That's my opinion. I mean, that's why like I sit. I got a certain amount of coin that I wanted. Like, oh my God, I'm holding this amount of Bitcoin essentially for nostalgia. Like, I want to have this. So, like, 20 years from now, 40 years from now, I can look down and be like, yeah, I got Bitcoin from blah, blah, blah. Like, I don't even care what it's worth almost. I just want to have it. But yeah, I'm looking at it like it's no different than me, like, holding some physical gold right now in terms of what it'll be like in regards to crypto. As far as what coins I think I've shot at becoming the transactional currency, the first thing I always say is it might not have it might not even exist yet. It might not have been created yet, you know. But I do like coins like Steam, EOS, Tron. Basically, these coins that have fast and in some cases free, transacting. I mean, that's what That's why I actually am surprised that Steam isn't a higher market cap because it has 3-second transaction times. It's essentially free. Like you don't get charged to do transactions. So like, why is this coin not taking off? And, there's other similar coins. So maybe it'll be one of those, maybe it'll be Steam, who knows? But yeah, in the end, like I said, I'm with you on kind of like, I think Bitcoin's kind of be the digital gold and it'll be almost like the safe place to like kind of store your coin in a way. If you want to it's like the savings account of crypto. Yeah. That's how I look at Bitcoin. So, but we'll see which one ends up taking off. I mean, who knows? Litecoin still got a shot. I mean, I own a good chunk, so I'd be happy with that.
I'm personally, I'm interested in, like, of course, EOS is kind of my number one go-to, but I try not to play the blockchain kind of agnostic role. Try to rather just because right now, in my opinion, EOS.io and a lot of the DPoS currencies, Steam, of course, as well, they're slated with the most utility, like you said.
Yep.
Nothing's really going to. I would be shocked if something got adopted that had a transactional fee attached to it, particularly when it comes to big business. And I think that I wanted to switch gears a little bit in that regard because I know, of course, like you are involved in a security token project, and we're hearing a lot. That's really been kind of like the new. That's been the fire around the scene for the last little while. Everybody's talking about security tokens. Are security tokens hype, or are they the next big thing that might kind of fuel the next revolution in digital assets? What do you think?
Well, the first thing I want to say is everyone give props to Matt. That was the most dynamite, smooth transition ever into the next topic. Like, I need to take some notes for when I'm hosting my show. That was money. Like, seriously, just straight money. Yeah, so as far as these security tokens go, I think 100% that's going to be the next wave because I think security tokens have more, what's the word I'm looking for? I think will resonate and grab people more than utility tokens. Because the bottom line is with utility tokens, anyone can come up with a quote unquote project and say, oh, we need a token for this. There's been so many tokens created where like, yeah, all right, that's a good idea. Having a utility token for like healthcare billing. It's a great idea. Is it ever going to take off? Probably not as a lead token. After cryptocurrency becomes an everyday way of life, then yeah, maybe tokens like that. But right now, to me, investing in something like that is a waste of time and money. So, But when you talk about security tokens, you're talking about something now that is going to essentially get linked to an actual investment. So right away, we're talking like, and it may or may not work, but you at least know it has a shot. It's investing in something that is worth something and is hopefully going to be worth something more. So just to use a basic example, because if you use the structure of just looking at an investment, like looking at a hedge fund, and kind of like essentially what the aim of Onyx.io is, it's, all right, we are essentially going to crowdfund professional investing. It's just like, you know what? All right, you want to tell us that, the top money managers are only available to the elite, the wealthy elite. Like, no, F you. We're gonna do it our own way. And think about it. We have crowdsourcing for everything now. Even with real estate investing, there's so many real estate companies now. They're doing crowdfunding where you have 1,000 people, 1,500 people invest to buy this, 35 unit apartment building. That didn't exist, even 10 years ago. So essentially, I think that's the biggest thing that STOs can provide, is giving the everyday Joe the ability to get a piece of professional money management. Because the bottom line is, a lot of people want to badmouth fund managers. And when it comes to mutual funds, I kind of agree with that. But in the end, hedge fund managers, yeah, a lot of them, go belly up. But the ones that are the elite that get the job done, these guys are rock stars. And I mean, it's impressive too, because it is hard to consistently make money actively investing year after year after year. So to use Onyx as an example, basically the goal with that is essentially invest in reputable hedge funds that have a track record. And now, it's no different than if I meet the requirements and I go to them, and, a lot of them have a minimum investment requirement. They're like, we're only taking investors that can invest like $1 million. Well, how do you do that? All right, let's do a STO. You do, well, heck, you can probably do it in the pre-token sale, but anyway, you do the ICO, and then you have whatever, $1 million, $2 million, $5 million, whatever it is, to invest in these large, professionally money managed funds that usually are investing only for the wealthy elite, big pension fund money, things like that. So it's a way to essentially take the power of people. We all join on our money, and now, hey, we can get this, top-notch quality management as well. So obviously, you can have ones that are going to do funds themselves, which is something that Onyx explored at first, because the CEO is experienced managing money. I'm experienced managing money, but at the same time, that is like a project of its own, and you need to have essentially like full-time team. And if you have resources to invest with money managers that have a track record that are proven, why not? It makes all the sense in the world. So that's essentially what Onyx is doing. So I think that the layman's explanation is an STO in that case is essentially just crowdfunding investments. It's creating an investment pool to get professional money management. Now, as far as STOs themselves, I mean, you can take just about any asset class there is, in my opinion, and create a security-backed token. So it's going to be interesting how things play out, because obviously all of Wall Street is going to fight it tooth and nail. You know what I mean? Because or they're gonna go head first and get involved. So they're part of it.
Sorry, JP Morgan coin. What do you think? Is that hilarious, or is that hilarious?
It's funny when I was gonna mention that earlier. Yeah, can't say I didn't see it coming. For the most part, it's gonna be it's an in-house. It's like kind of an intranet, so to speak. So I get it, but that's one of my biggest worries with crypto, is that you're gonna have major corporations and governments just create their own coin. And people are like, oh, well, it doesn't matter, because the whole reason that people are in crypto is because, they want privacy, they want freedom. Like, I'm like, yeah, no, you're talking about our little crypto community. Like, go take a walk out into, everyday life and talk to people about crypto and see if they agree with you. And I think that's, since I'm involved in so many other things, I still feel like I have my finger on the pulse of like the average American in a way that's not very well versed in crypto. And I'm like, guys, I agree with you, but we're not the majority. We're the minority by far still, and it takes a long time. Shifts in society take a long time. I mean, think about when the internet first started. People hated on it. They're like, what the hell is this? Who's going to use this? Blah, blah, blah. Now there's not a single person that's not on the internet. You go jump in a DeLorean, find Marty, jump in the DeLorean, go back to 1988 and talk to someone about the internet. You know what I mean? It'll probably be similar to how people talk about crypto now. So that's kind of awesome, because if we can have that same progress, 20 years from now, crypto, will be a way of life. I'll be an old man at that point, so that sucks. But
for me, it was the recognition that this, and like, think about everything that JP Morgan has said about crypto and Bitcoin.
Yes, just bad mouthing it.
It's the worst. And for me, it was just a little bit of that validation of businesses, and like JP in particular, taking a cold hard look at blockchain and realizing like, well, that's some shit. You know what I mean? Like, we can't deny this stuff anymore. Now they're launching their own token. I recognize that it might not have the same functionality as a lot of the typical cryptos that we use, but it's also a sign of big business, big corporate structured business in finance, paying attention to blockchain and taking a little leap over. For that for me, is super encouraging to see. Do you think that perhaps that little bit of extra security that people get in participating in some of these STOs will help to slowly onboard a lot more kind of mainstream investors over towards crypto, or do you think that's still a while away?
I think it'll definitely help. I don't know how long it's going to take, but you know, and as you mentioned with the JP Morgan thing, I mean, I think it validates the fact that blockchain technology is no joke. And I've said that to people when I teach people about crypto. Like, I'm like, listen to me. I'm like, because they know Bitcoin. I'm like, there's cryptocurrency and then there's the blockchain. I'm like, you need to know the difference. And so I think the blockchain, there was never a doubt that it's a revolutionary technology. And it's gonna be used, you know, in everyday life, logistics. It's so great for, you know, you always see IBM starting to, you know, implement it, you know. But I think what the security tokens bring that utility coins didn't is like, you have something tangible. It's like, I know what I'm investing in. And again, like, I'll use Onyx as the example. It's like, all right, I'm essentially investing in, and this fund is investing in funds. It's a fund of funds. All right, so I know that my money is going into whatever it is, XYZ fund and, you know, ABC fund. And then based on the performance of those funds, that's going to dictate, you know, the value of my coin. And that's how it is. The coin is basically backed by the net asset value of the investment. So in a way, it becomes no different to me than just buying a stock.
Yeah.
Except for now, again, I get to get professional money management instead of either A, having some schmo financial advisor who in the end is really just a salesman, or B, just trying to pick stocks myself. You know, most people don't want to do that. Like me, that's my passion. So of course I want to do that. But most people who do other things, they don't want to be bothered with looking at their investment portfolio, you know, even once a month, let alone every day. Yeah. So I think the fact that it's backed by something, it's not backed by just an idea. Utility tokens are essentially backed by an idea. Maybe that idea works, maybe it doesn't. I think the fact that it's backed by something, you know, you can say, listen, this is what it's for. And now, granted, anyone can blow smoke, just like they did with utility tokens. Oh, this is our plan, and then they never do anything. You can do the same thing. You can do a raise and then never actually invest the money. But that's anything. That's just, you know, that comes down to people and you know, doing your due diligence and vetting the team and everything. So, but I think the sheer fact, and in the end, you know, investing truly comes down to psychology, fear and greed, the two strongest human emotions. So it comes down to the fact that, all right, my investment is going to go into this thing, this specific thing. Like, I know what it's going to be used for, and it's something that's already functional. All right, sweet. I'm good. Like, I have comfort now. Like, I know where my money's going, what it's for, what it's being used for, as opposed to a utility project where it's just like, all right, well, yeah, we're going to use all the money to get this off the ground. And even if they follow through on that, you have no idea if that project, if anyone's going to be interested in it or buy what they have to sell, you know, so to speak, or use their service, you know. So, you know, that's, I guess, the difference in the end, though, between investing in an asset and investing in essentially what is a startup. You know, every utility coin is basically a startup. An STO, yeah, the coin itself is a startup, but what it's investing in is generally an established asset or an established investment vehicle. So for me personally, being risk adverse, I love the idea because I still think in that case, I can do my research just like I would on any other investment, just like I would research a stock. You know, I know what I'm investing in, and I'm letting someone else handle it for me, which is probably a smart thing to do. You can't do everything yourself, but for those that, you know, don't want to manage their money, how would this not be a good bet? So, and shameless plug for Onyx. They got the pre-ICO sale going on right now. I think tokens are selling at a 33% discount. So I think there's a half Bitcoin minimum. But if you go to onyx.io, you can go to the Discord. There's a link to go to the Discord server and just jump on, reach out to the team. And I'm pretty sure if you mention Scaredy Cat Guide, they'll probably give you a 10% discount on top of that. Or a 10% bonus. Yeah, I should say a bonus, not a discount. I think you get a 10% discount. So apparently, apparently my
Yeah.
name means something, I guess. I don't know. But
So if anybody wants to go check that out, it's in the comments here, anox.io. For me, the whole proliferation of security tokens and the coming of security tokens, of course, I do a ton of work with Warbly, but it's not just, I feel like it's hard for me to separate myself from that, but I think in the
can
same
we talk about Warbly a little bit? Because like I have some basic understanding of it, and I own some coins, and I love, and what they're doing, I think, is what we need. Like that's like Warbly and some others like that, is that's leading the charge to get STOs kind of like accepted and people comfortable with it. So I'd actually, I'm sure your listeners already know, but if they do, they can listen again, because I'd like to actually get schooled a little bit better on Warbly. So I'm going to take advantage of my time with you.
I do enough Warbly shilling as it is, but I'll give you I'll give you the breakdown. It's essentially like a token offering platform. They're creating something that's going to have this gateway with IBC, so instantly from like Bitcoin to whatever it might be, to to won to US dollars. It can deliver whatever across the network instantly within seconds. Same power of EOS.io. And they also have a security token platform. It's basically just it's a simple concept. They took EOS.io and then they put an element where they've got their coverage for AML KYC, so everybody has to be verified to be on the network, which allows these things, right? So it's not really a super complicated concept, but my understanding of the whole STO thing is that it's going to be able to micronize some of these offerings and bring them to market as initially securities, which will be for accredited investors, but a lot quicker to kind of a general opening as well, which they might not normally have been available for. So it's just a platform where people can go and tokenize their businesses and do it legitimately, backed by the SEC and backed by the regulations of the SEC. I'm not going to sit here and say the SEC backs Warbly, because that's
No, I hear you. You guys are following the letter. But I mean, it's platforms like that though that I think one are necessary, and two, make it, like you said, easy to invest, and even an opportunity for projects like Onyx, because right now, like, it's basically on EOS Dex, and that's where it is. But is that the end all be all? Probably not. Like, probably an upgrade, so to speak. So, Onyx itself is a good candidate to end up on Warbly, especially, maybe even for the actual ICO itself.
I was just saying, I know some people. We'll talk after.
Yeah, exactly. So yeah, and I mean, like I said, I'm a minority equity holder in that project, but we can talk. But I can get you obviously in touch with the CEO, Oscar. He's a beast, and it's his baby. He kind of founded the whole thing, and it's yet another project that I got involved in from someone that I wanted to do business with, because I'm particularly picky about that. And this is going to be completely random, but I actually had one of my proudest moments in business this week. And I have call him kind of like my mentor or business buddy. He's in his 50s. He's a beast, but we get together for like lunch once a week. And I told him, I was like, dude, I'm so proud of myself this week. He's like, wow. I'm like, I fired my first client. And he just started laughing, because he had gone through that kind of process himself. But the bottom line is, like, whether it's doing business with someone or even someone you're serving, like, I don't want to do business with crappy people, or just shady cats, or people that can't give me straight answers. So I was working with someone else on another project, and I was just like, yeah. And he was asking me for some more stuff and he wanted to get involved in more things. And I'm like, you know what, dude, I got too much on my plate, and what we've talked about just really doesn't seem to be working out, the way you originally pitched things. Everything's always changing. I was just like, I'm good, and he kind of kept offering me things, and I'm like, no, I'm all set. Like, so, yeah, I take pride in trying to, only work with people that I really feel good about. But you never know. People are people. You never know what's lurking. But yeah, I've been blessed to run into a lot of good people. You would think crypto is like this seedy place and you're going to meet all these shady cats off the internet. And I can't tell you how many good people and good relationships that have come into my life because of the crypto community. And I think people forget that. They only want to think about, some shady character in some, land far, far away. But that's I think you can see those people coming a mile away if you have any kind of wit about you at all. So
here's what I like, just to continue on. Here's what I like about the security token thing. Why I think it's going to change the world. If you can have a company list for a security in the regular world, they're getting screwed by the investment banks. They're having to give out a ton of their equity of the actual deal. It costs them millions, and it costs them like millions. Like the average security to issue is like $4 million just to bring it to market. I think like $2 to $4 million. Having doing an STO can take that and literally micronize that. It can cost. You can launch an STO with legitimate company that's been verified, following all the rules. At an entry point of around $200,000. Like, why would companies continue to do offerings if now all of a sudden they can do exactly what they were doing, but they can do it on blockchain? They can micronize these payments. They can use smart contracts to take out all this, all of the kind of secondary work. Like, I think that securities are really going to lead security tokens and real business on blockchain, stuff kind of similar to what you guys are doing at Onyx, bringing, investment opportunities onto the blockchain in a way that kind of just works and gives a little bit of assurance to investors is really going to change the world.
Absolutely. And I think I'm sorry to jump in, what you mentioned about an actual like stock. Like, I think one day we're going to see that. We're going to see a company, instead of doing an IPO, do an ICO. And when that happens, like, that's when we know, like, in terms of society on a whole, STOs have arrived.
Yeah, 100%.
And hopefully it'll be on Wordly.
Hopefully it will. I'm hoping too. Trust me. To me, it's super interesting. I think that's the next generation. We have to innovate the next bull run. Like, we're not. I mean, I would be really.
Agreed.
Crowds are so crazy. Like, if they see something shoot up, everybody jumps in the bandwagon. I don't want to see
mentality.
Yeah, man. I don't want to see. I'm scared because I know that people are very crowd mentality, and that's very likely of happening. If all of a sudden some whale goes in and buys whatever, maybe, whatever, drop a few $100 million into Bitcoin, it goes up, people just chase it. But I think like the perfect way that I would like to see the next bull rise, as I like to call it, is a lot less parabolic, a lot more sustainable, and fueled by actual technology, companies, and real things behind some of these tokens.
Yes. I think you'll see that too. Just to kind of like finish that point. I mean, I do have a habit of comparing it to, the creation of the internet and the internet bubble. But if you look at it, it's kind of going through the same cycle. We had that anyone just threw money at anything that had .com at the end of it. You know what I mean? Well, anyone threw money at anything that was an ICO. And now that we had kind of that blow off and that pullback, what's going to push the market higher is, like you said, it's going to be actual utility, actual, security-backed tokens. It's going to be that the technology is being used for something. It's creating worth. It's creating value, as opposed to just sheer speculation. And that's exactly what happened with the internet revolution. And so far, it looks like crypto's on the same path. So I hope it can evolve as a technology the same way and become part of our society. So I think you're right on point with that.
Sure. I wanted to ask you, because I don't want this to go too long, so I'm sure you have places to go and things to do, but I did want to ask you something about like indicators. What are some of the indicators that you use in your trading, like primarily? What are kind of like your go-tos when you're setting up for a trade? Maybe it's a longer trade, maybe it's like a week-long trade, or maybe it's even a shorter trade. What are some of the things that you tend to use, or at least what are some of the basic tools that novices should go out, learn about, read up on, and get to understand?
It's interesting you mention that, because that answer would have been very different just a few years ago. And what I found is the simpler I make things, the better results I have. So, I look at a lot of these new crypto traders, like they're trading for the first time and it's crypto. Like, they were never stock traders in the past or whatever it is. And they have like 8,000 crazy indicators. Like, there's this one Discord server I'm on, and I'm just looking at these indicators like, wow, you guys are just going out of control next level here. I'm like, you hit a point of saturation with indicators, because in the end, for the most part, it's all based off of price and sales, like price and sales, what's the volume? So I've gotten to the point now where I generally pretty much look at the price chart and volume, and that's it. And I use a moving average as a gauge. I use a 10 period, like a 10-day, if I'm looking at the daily, as a gauge to see if we're stretched a little bit in the near term. And support and resistance, basically just trend lines. I'll do support and resistance. I'll draw, some ascending, descending channels. And that's about as much as I'll do now. But Yeah. And my results are better that way. But I used to do all of my stochastics, MACD, Fibonacci's, all that. What I found, and again, might have something to do with my experience from, basically reading charts for, more than a decade, is that a lot of times when I see people post fib levels, they'll line up around where I'm pointing out reversal price points or support and resistance. So I'm just like, all right, that's good to know. That just validates what I'm seeing. But yeah, as far as like a novice trader, I mean, this is what I would do. And it's funny, I got to get this, I got to get that crypto course up on Tim somehow, because essentially what I teach is I do a video about support and resistance, how to recognize it. I teach a video on the U-turn pattern, a bullish and bearish, and then I talk about time frame analysis. Those three things right there, as a new trader, I think are the basics and your best bet to, one, not overload yourself and confuse yourself. Because the bottom line is, the more indicators you look at, the more confused you're going to get, because they're going to start conflicting more and more and more. Very rarely do all the indicators line up. Yeah. Are they useful? Yes. You can use MACD, you can use RSI to see, if you have a divergence, especially with RSI and MACD, you look at price, you look at those. I'm like, are they diverting? And if they are, to which direction? So not hating on the indicators at all. Like I said, I used them all myself. But at this point, I found for me, keep it simple, stupid. So. Yeah. First thing anyone should do is to learn how to read a chart in that recognize support and resistance points, because without support and resistance points, how can you set up your risk reward scenarios? So once you can recognize bottoms and tops, then you can realize, all right, if I get into this coin at this price, all right, I'm risking whatever it is, 2-3 points, and then my upside is hopefully 6, 7, 8 points, because you want that 2 to 1. But yeah. That was exactly what the three things I would say for new traders: recognize support and resistance, use time frame analysis, try and trade in the direction of the trend, and if the trend's sideways, that's fine. Trade the channel as it bounces back and forth, and then find one pattern that you're comfortable with recognizing. Like I said, for me, I feel like the U-turn pattern is pretty simple. It's got a lot of different names. That was coined actually at the prop trading firm I was with years ago. So that's just what I call it out of habit. But it's basically just it's a pretty common reversal pattern. But yeah, as a newbie, keep it simple. Focus on those three things. And I think from there, then you can start learning about the indicators and maybe growing your tool belt a little bit.
For sure. Yeah, I use, I'm not like a super advanced trader. I've only really started playing around with it a little bit more. But MACD, RSI, Bollinger Bands.
Yeah, Bollinger Bands are good too.
Clouds, volume, essentially. And sometimes, PPO, which is kind of counterintuitive because it's very much it's not a leading indicator as such. It's based on what's already happened essentially. But yeah, no, that's really cool. Mitchell, man, I want to thank you for coming on today. Honestly, just spending some time, because for me, this is super interesting. I'm hoping that maybe we could even make this like a weekly thing, and we'll figure out maybe something a little bit more targeted next time, and just like specific topics that we want to talk about and get you teaching some things. I want to thank you for.
Yeah, that'd be great. So
it would, man. You're awesome. If you guys get a chance, you got to go check out Mitchell on mentormarket.io and also the scaredycatguide.com. All those links are here as well. Make sure you go check out his project, which is onyx.com, that as well is in there. And man, thank you so much. It's been an absolute pleasure. I look forward to hopefully doing this sometime again soon.
Yeah, Matt, I appreciate having me. And yeah, don't everyone get on Tim and read all the other mentors as well. They got a lot of knowledge. So, you can learn a lot.
You really can. I'll see you soon, man. And until the next time we meet.
All right. Thanks, Matt. Take care.
See you, buddy. Thanks, everybody, for dropping by. We appreciate it. We'll see you on the next one.